So what we are doing here on the Nifty is the initial set of impulses. Okay, so we've done wave 1, wave 2, and then we're trying to figure out whether this is only wave 1 of 3 and 2 of 3. It can take support near the averages, or it can go to the daily moving average, which is a little lower. The worst case scenario though would be that this entire rise, because it's 3 waves only so far, which I'm saying 1, 2, 1, 2, ends up being an X wave. Now, while I have tried to discard that in the weekend with Indiacharts, if at all, it is still happening, because last week I think I discussed it in context of what happened in 2004, that we, after a major bottom, we got an X wave and then we got a Z, and that last Z, it didn't make a new low because this is still a selling climax, remember, so that will not change because you're at the highest volumes. But what can happen is you can get a ending like pattern in a wave Z over a period of couple of weeks, which can then end up becoming a boring phase, and then only things actually pick up more smartly. So if something like this is happening, we won't sense it immediately, but it would be a time waster for sure. How would we know it's happening? I think one way is that, of course, the 20 DMA breaks, so that is one way. The final way of knowing is, of course, this previous wave 1 low breaks, but by that time you'll be way down from here. The reason to still think about it is that you have not crossed the 61% retracement mark of the previous fall. And it's still a 3-wave rise. So that's the only reason to still keep this option open. Otherwise, we could have sort of discarded it. So those are my thoughts early morning. This is, of course, pre-expiry week. So there's always a time to wait back and think what is going on. Some selling pressure comes in pre-expiry week just because of the options closing. And so stock options, that is in specific. And so that gives us time, to figure out which of these two are happening from a trade perspective. Overall, I don't think we go below this previous low. So that is still the final bottom. The only thing is, will we make a truncated Z, or we'll simply do 1, 2, 1, 2 and continue higher. So those are the two options I can think of in my mind. And so for that, since I mentioned the 20 DMA is an important level, let us just go to the daily chart and check out what is that level. And that level is a little down here at 16,707 as of today. And so that's quite a bit, because we are at 17,200 and we're talking around 500 points lower. So that's why it's hard to say if this is even a 2. It can even come back, touch the 20 DMA and go higher. That can also happen. So it's not necessarily an X wave just because it failed at 61%. So what would Bank Nifty do? Very, very similar, because the Bank Nifty also is 61% of this last fall. So we've broadly done WXY inside a channel. So there's no reason for a Z formation. But yeah, again, you don't know. We've seen it happen in a couple of cases, but in the Bank Nifty, I would think if this ends up being 3 waves, in any way, 3 waves would require it to break this previous low, not just 20 DMAs, that's a little higher up. So I wouldn't say that's the main reason, but what if it's forming a triangle? Now, why would the market waste so much time forming a triangular structure or, some kind of wedging structure on the Nifty? Only because the news flow has not changed. We bounced out of an oversold condition, but the news flow, which is Russia, which is our main problem, has not changed. The inflation, interest rate thematic of, rates going up is still around, although I think much slower than expected. So that's fine. But I think it's mostly this geopolitical thing, which till it's hanging around can cause a time wastage, because a lot of people are spending time thinking about, whether to, press the accelerator or not when it comes to actual business. I'm not talking about investing in the stock market. That's another one. There the fear is, of course, higher. So as long as people remain scared of the geopolitical risk, the buying pressure, selling, maybe a selling climax is done, but the buying pressure required to take it much higher can also be missing. And that is why you would end up getting these kind of formations, if at all it happens. I'm saying if at all because we've seen this first springboard reaction. And once the market senses that this geopolitical thing is temporary only, let's not bother about it, markets can continue higher. So don't just, I'll not rule that out. And so this may be just a good week to test our thesis, and if market holds out for the week, then all is good. We'll go on with the 1-2-1-2 count, which will be the preferred count for the time being. Okay, when we look at mid and small cap stocks, yeah, after the breakout, they also near the upper Bollinger Band. Will it pause here for a while? We can see. But good setups, I think, across stocks after this correction. This ABC is now sort of visible in many individual names. having done good retracement, 61% or back to the previous averages, bands or whatever. That's all happened. It's already done. Some have broken out of channels, some have not. That's the only difference. So we look at today's sector leadership. Then what we'll end up seeing is the major gainers actually metals again. So it's taking out the wave 1 high. See, just when we thought, and so I had mentioned the possibility that wave 2, okay, if it goes below the 20 DMA, it goes lower. But that didn't happen. And so the channel I was really drawing, what is it really gone? Yeah, I was drawing for this low, this entire range. In fact, for Tata Steel, I was thinking it's doing an expanded flat within this, and that also was done. The only thing is, because your daily momentum was in sell mode, will it continue to do a deeper retracement? But you see, that was all happening during this complex corrective phase. Now, if there is strength, then it's already breaking out and going into wave 3. Markets don't wait. So that's what metals is showing us right here. We don't wait. Of course, there's the healthcare also trying to get back on its feet. And then there is the small cap index. It is a CNX commodities index. I have not looked at the components. That's held out finely, not gone below this low, in fact. So held out better than the Nifty itself. If I go to individual stocks, then like I mentioned, if I look at say Tata Steel, I would have to think of this as an expanded flat. So I think I mentioned it in one of the waves of ABC when it failed to cross higher. But here it's taken support at the 20 DMA and bounced. Now when I look at this, okay, because it's not taken out the high, you can still say ABCX and then ABC. Will it come down or will this go on into a third wave? If I look at the metal index, it looks like we'll go on into a third wave. If I look at the individual stocks, I'm not so sure. So I think that confusion will remain in my head as to whether the move is going to be runaway. It's all going to be, but your risk reward is clearly stock specific. This did close to the lower band here. Again, it came close. And if I really take a trend line from this, so it is sort of broken out. So this decline may be done, and that's how you'll have to really see it. But again, it's not across the board. Coal India is the second one, again taking support here, but the momentum indicators down here in sell mode didn't turn yet. Can this be a false flag? Can it be ABCX and then again down and then up? I get fooled by that many times, which is why I'm mentioning. But there are times when you think about, yes, it's trying to fool me, that time it actually runs away. So that's just the beauty of market. So this is how, so when I look at say Jindal Steel, is it really forming a wave 1 pattern, it will do 2, or is this going to run away in 3 of 3? Yes, this is going to be a tough one. So I think that's the only one sector which is showing that kind of swing. If I look at other large caps, SBI, negative divergence resulting in a correction for the stock. And if that's the pattern we'll end up seeing across the board, stocks are waiting to pull back. Maybe things like even other financials, like I'm looking at ICICI Bank, was holding the averages here. It's close to break point. Never negative divergence in the hourly momentum. Will it lead to a further decline? And that could pull back the index a little bit. So that's where the market action is. The market action is showing that slight pullback pre-expiry weeks. Theory may do it again, and we'll figure out what the right structure is once that is done. And metals holding out, we'll see whether it continues or they also pause a bit with the main indices. And the amount they really pull back or pause will tell us how they're going to do forward. So if they hold out, then that's a sign of strength. If they have to pull back, then that will be the final pullback along with the indices, which will then sort of set the stage for the next move higher. So that's going to require some monitoring in the next few days.